Hey, good morning, YouTube. Today I'm going to take you real quickly through the June 18th things that I stated that I was doing right now, how those worked out, and then what I'm shifting today. I'm going to edit kind of on the fly and show you how those turned out and what I'm thinking about doing and what I've been doing today. So let's get right into this. Transition. Okay, so I was buying a new rental in Arkansas, expecting a 6% return on capital, and a cash flow of $292 a month. And I bought a cost of money increased to 7.25 because that's the interest rates. I bought a new rental in Missouri and had a contract on a new one in Missouri. These are kind of the things going on. I had sold some Walmart stock, some Home Depot, and some VIG. And crypto was staking Solana still. These were the stocks I was trying out, and I sold these and I held the Ally. For risk reduction, I bought some mortgage treasuries in my HSA regular brokerage account. A loan was going to reset, so I was trying to prepare for that loan. Major banks were failing, and so I had a view on that piece. And so let's get down. I have a sales company, had one closeout. So let's get down into kind of editing, updating what we were doing. So the rental house I bought in Arkansas, 6% return capital, was essentially the tenant moved out, let their son live there, their son got robbed, moved out, and net, they trashed the place. Now, most people would be very upset by trashed place. For me, when I bought this house, I essentially knew I was going to have to clean it out after the renters leave because it had renters in it. I knew I was going to have to redo the carpeting and repaint, right, those type of things. And so once all those are done, the trashed aspect of this isn't really that big a deal that I can tell at this point. Clean out will cost me a little bit. So this, as far as trashed tenant. So risks occur. You can't get emotionally involved in it, or you're going to cost yourself a lot of money by being emotionally involved. And so the tenant trashed it. I'm guessing it's going to cost me $2,000 more to fix it up. And the property, I think I bought it at about $230. It probably wouldn't sell for less fixed up than like $275 today. So it's increased in value some on the property even since this point. And so do I regret buying this? No, it's fine. It'll work out over a period of time. I could not acquire a property in that area today at that price point. Cost of money was 7.5, and so I'm going to get rid of this one because this isn't a current. Cost of money is 7.25, and now the cost of money is 8. Okay, 8%. Now, what do I think will happen? I think it will peak, this is a good thing. It'll peak between 8.5. I think that's where it'll peak for commercial rates. That's a good thing because I was planning on a peak of 10 across my portfolio for a long period of time. I don't think that will occur, so that'll save me some money. I bought a new rental in Missouri, and so we'll update that one. I bought that one at $210,000, and the cheapest on the market today is $265. Tenant is in there. It's rented for $1,600 a month, and I think it has a slightly negative cash flow of $200 something a month, but I actually financed $20,000 more than the cost of the property after fix up for that house. So I financed $240, and so I actually got $20,000 in cash on that property. It still has a profitability, but negative cash flow. Okay. Cost of money increase, so we can pop that up for next time. This is the new rental, so get rid of that. This is the latest update. Address number is 210, so 210 on a certain street. I just go by the number usually. I have a contract to buy a house in Missouri for $240. What happened on that house was it turned out that the house needed $50,000 in hidden pillar work. Because my property manager and real estate agent were very proactive and trade initiative and things, we found that before we closed and got out of that contract. So I'm just gonna delete it and say, we saved $50,000 by having good people working with you. From an investment standpoint, I had sold these, and Walmart is probably up a little bit at this point. VIG is about the same, so I just bought a little bit of VIG just like yesterday. Home Depot, we sold it, and now we're waiting for opportunity, which may or may not come. I mean, if we don't get opportunity and we want to own more Home Depot, we can still, dollar cost average into Home Depot over a period of time. And so that might be the thing. And, Walmart, we are still dollar cost averaging into the stock. I checked the Solana, and Solana price is about the same. And it is paying 7.4% interest right now. Now, here's the problem with Solana. It pays 7.4% interest, but Solana, along with other supposedly deflationary cryptos, it's at a 10% inflation rate. Okay, now 10% inflation means they create 10% more this year. Next year they create 8.5%. And this inflation is, unlike the government inflation, it's paid out to the holders of Solana. I get 7.4, and the company running the node that everything gets staked on, gets the other portion of that inflation. So really, you're not gaining unless there's a gain in the price on Solana. You're going up 7.4 on this inflation, so you're actually probably losing 2.6 to inflation. However, the complication is that it's measured in dollars, which are also inflationary and go down in value. So when Solana is holding its value, it means it's holding its value in dollars, which are inflating. So double confusion there. Inflation meaning that the currency is being printed at a certain rate, devaluing it compared to the market with equal demand. Okay. These, I'm glad I got out of these and sold these. Don't know where they are, so we're going to get those off our sheet. Ally, I held it, but I did change it and move it. Essentially, I sold it in my brokerage, and I moved it to my HSA because I wanted the more free cash flow in the brokerage account for properties and things like that, and interest rate risk. I was buying treasuries, okay? Treasuries. 5.3%. I have a significant number of treasuries. Same in my HSA. This loan still resets in March. It's at 3.85 today. I'm guessing it's going to go to something in this range. Have some money saved for that to kind of help with that risk, but not sure what's going to happen and what if there's a better place to put the money rather than paying down that loan. Major bank failures haven't occurred. I'm going to get rid of this. And back up here on real estate, I have a new Arkansas private contract, and I'm running a fix-up right now. Remodel right now. We're doing bathrooms, and kitchen, basically, on that house, and then it will be, fully rented on that house. And then I have another, obviously, on this house up here. This house right here. Well, the one that I said worked out bad, we're doing a remodel on that. Second remodel. On a trashed house in Arkansas. And this one, I'm expecting to go pretty smoothly. I've been over there. The property manager's taking care of it pretty well. They know what they're doing. So, but we have two cash-intensive things going on, which we have scoped, and it's probably going to go against some of this treasuries down here that we've been accumulating for this house right here, this new Arkansas house, and probably I'm going to close that in November because it's a private sale. I have more flexibility in the things. On the sales company side, the closeouts, on the closeouts we've done basketball shoe deals, running shoes, and a soccer deal. But this is kind of stuck behind a move. There's a move in that company, and so they've been focused on the move. I'm hoping things get kind of freed up there because it's causing some difficulties in the other things that I'm doing, but not too much at this point. And then the other sales companies, we had a blankets deal and some clothes that we started selling, and that's working out pretty well. Takes up a lot of space, but it'll take a long time to sell, like maybe 3 years to sell this stuff. But the margins are good enough that I can carry for that period of time. So that's what's going on with the businesses today. What am I thinking about? I am unsatisfied with the progress. I'm looking for the 5% we're doing wrong, so we can correct it. We are getting better on the real estate side. We're getting better at the management, better at the fix-up, better at the scoping, and those things will help us in the future. And so I've been pushing that with some good people. And besides that, I want to get to the next status and see what that looks like. Maybe if I have 20 houses today, what's 100 look like? What's 1,000 look like? What am I doing wrong? And trying to grow myself into that role. Sorry it's been so long since the video. I hope this gets to you okay, and I want you guys just to have a great day, and like and subscribe down below if you want to see more, and give me a comment. Tell me what you want to see. I can share what I'm doing, why I'm doing it, the thought process. The thought is really what drives the action, which drives the results. Most people don't understand that, how that works. That's what I'm trying to tie into a little better, and I'll talk to you later. Bye.